Hello, everyone. Thank you so much again for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I also have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, give us an update on last week.
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. You know, we had a week that was a bit more weak, a bit lower for the U.S. equity side, as we saw some inflation reports come out, maybe putting a little bit of concern about the direction of the Fed. So we saw the S&P index fall marginally, where we saw the Nasdaq down just under 1%, but we saw the Russell off about 2%. So only 4 of the 11 S&P sectors were even positive. If we looked at what did work, it was really energy and basic materials. So we saw crude oil up about 4% as some supply, let's say, issues or projections tightened a bit. We saw a copper future surge about 6%. If we look at Bitcoin, it pulled back. It's been a while since we've seen a real pullback in Bitcoin, but right before it hit almost 73,800. If we look at U.S. Treasury yields, they shot up really sharply higher after those inflation numbers came out, like the CPI and the PPI. They shot up quite a bit. I think we saw the 10-year Treasury shoot up to about 4.3%. And that was the highest point we've seen all year. If we look at consumer prices, they increased about 0.4% year over year, 3.2% in February. And what was kind of the leader in that report? We really just saw higher energy costs. Wholesale inflation jumped about 0.6%, and gasoline jumped about 6.8%. Some other economic numbers: we saw U.S. retail sales rebound in February. Consumer spending continued to grow, but slower. So maybe that's good from an inflationary standpoint. If we go overseas, we saw Japan really announced that its largest companies agreed to make one of their largest pay increases with their factory orders in 25 years, really setting the stage that the Bank of Japan is potentially at its end of its negative interest rate or policy stance it's taken on for so long. China authorities also warned that the real estate developers will not be bailed out by the government. If we look at jobs data over in the UK, it did reveal some moderate growth trends. If we go over to Europe, we continue to see a struggle there in terms of manufacturing continue to slump a pretty good bit. Jeremy, if we look like what we're coming into this week, I think it's going to be the Fed and the Fed show. It doesn't matter if it's in the United States or if it's in the UK or Japan, Australia, basically having a lot of Fed speak around the world. Fed's also going to be summarizing its economic projections on Wednesday. So if we're looking at U.S. economic calendar, it's going to be featuring some monthly housing data, some building permits. We're looking at housing starts, some existing home sales, and then we'll be looking at the global flash PMIs for March. And that's all going to be coming out this week.
Gotcha. Well, I had a two-pronged question for you, maybe. So are we starting to see a rotation in the market? And maybe the second part of that question, for the average investors, should they start to kind of look outside of what has worked over last year and year to date this year?
Yeah, no, I think that's a great question. We get it all the time. And I think the answer is yes, right? You want to stay diversified. And what's the old, what you try to do is buy low, sell high, right? So if everyone is so convinced, and some sectors have been so strong, like technology or anything that's been around AI, and that area has been so strong, maybe we need to start looking out in some other areas. And that's what we've been recommending for a good while. I mean, some underperforming sectors might be utilities, energy, international, small cap stocks, bonds in general, right? Bonds popped up, yields popped up a pretty good bit with a fear that the Fed's not going to be as aggressive in lowering rates as the market maybe came into the year with. So I think all those areas, can be areas that you diversify or look at diversifying into. Also, not mention healthcare finally really picked up some strong steam. So that could be an area too. But that's just a part of good old-fashioned diversification when you're constructing and building portfolios, your wealth management plan.
Sounds good. Well, we always appreciate it. And to our listeners, if you're new to our weekly wrap-ups, you can always check out our website at wickhamservices.com. All of them are there. Also on our YouTube channel and our social media channels as well. So go check us out on Facebook and Instagram and LinkedIn, and we got everything on there. And we'll see you next week. Appreciate it.
Take care.